Hi children, today we are going to see the continuation of stock exchange. Previously we saw what is the meaning of stock exchange, what is the features of stock exchange, and what are the functions of stock exchange. Now we have to see what is the benefits of stock exchange. Normally the benefits goes to the three category. One is the community and investors and the company. First, we have to see what are the benefits to the community. Number one, economical development. For the community base, it accelerates the economical development by ensuring the steady flow of savings into the productivity purposes of the company. So automatically the value of the shares is increased, the economical status of the country is also increased. So this is one of the advantages. And number two is a fundraising platform. Which one is a fundraising platform? The stock exchange is a fundraising platform. So it enables the well-managed profit-making companies to raise the limitless funds by fresh issue of the shares from time to time. So it is one of the advantages, and it is a tool to divert the resources, like a scarce resources are thus diverted to the efficiency running enterprises for the better utilization. So the company, what the fund given by the people, the fund is developed in the various input, in the various investment, in the various places. So automatically the value of the company is increased, the value of the shares is increased. So naturally the economical status of the country is also increased. So it is a tool to divert. And next is capital formation. The stock exchange to encourage the capital formation of the investors. And next is the fundraising for government. This is one of the advantages, because the government raising the fund for the undertaking the different types of project through the sales of the security and through the stock exchange. So the stock exchange serve as a platform for raising the public debt. So this is one of the advantages to the community. And next, what is the benefit? The next benefits to the company. The first one, enhance the goodwill or reputation of the company. Automatically, there are so many companies are trading in the stock exchanges, but all the companies cannot come to first. So if the company, which is any one company, come into the first position, automatically the value of the company is go very high level. For an example, Reliance company or MRF or Infosys, whatever it may be. So when the company's standard is increased, the value of the goodwill is always increased. So this is one of the advantages to the company. The company's shares are quoted on the stock exchange and a greater goodwill and credit standing. And second, widening the market. So the market of the companies is spreading throughout the country. There is a wide and ready market for the type of securities. Next, the raising the huge funds. The stock exchange can raising the huge funds easily by issue of the shares and debentures, and increasing the bargaining strength. The companies whose shares are rising in the stock exchange, the value of the company's demand, hiring the power, and the event of the further expansion and merger or any amalgamation. So this is one of the advantages to the company, increasing the bargaining strength of the company. And next to the benefits to the investor. So what are the benefits to the investor? First one is liquidity. The stock exchange helps an investors to convert his shares into easily, quickly, and increasing the liquidity of his investment. This is called the liquidity. You see, there is a two term. One is easily convertible, quickly convertible. The easily convertible means it is easily convertible into cash, and quickly convertible, apart from that other things, it is a quickly convertible into cash. Next is adding collateral value of security. It means you having a very big company shares, automatically you getting a loan from the bank. That is called the security. That security is called collateral security. The fact that the security is dealt on the stock exchange, it makes a good name or good collateral security for obtaining the loan from any banks in the country. So this is one of the advantages to the investors. And the investors' protection. The stock exchange gives a safeguard the investors' interest and ensure the fair dealing by strictly forming rules and regulations. So the investors always protected by the stock exchange. And next is you can assessing your real worth of the security. You want to know what is the value of your present share. You're having a lot of share. You want to know, for example, if you have any A company shares, you want to know what is the present value of the A company shares. So you can easily assess the stock exchange. You can easily assess the real worth of the security in his hands as a market quotations are published daily in the newspapers and websites, and there are so many apps are available. So this is one of the advantages to the investors. The three are the advantages. One is the benefits to the community, benefits to the company, and benefits to the investors. Now we can see what are the drawbacks. That is, what are the limitations of the stock exchange. Number one, lack of uniformity. Because there are 24 stock exchanges in the country. So the rules and regulations is not uniformly for all the stock exchanges. That is a lack of uniformity and the control of the stock exchange. And next, absence of the restriction on the membership of the stock exchange. Any person, there is no educational qualification to join the member. So that is the absence of restriction on the membership. And the third one is a very important, and fail to control unhealthy speculation. So many times the stock exchange fell down. The value of the shares, suddenly it fell down. So it is a duty of the stock exchange to control that, but sometimes it can't. So the stock exchange failed to control the unhealthy speculation. This is one of the drawbacks. Next, allowing more than one charge in the place. In the stock exchange fixing the price, if the price is same for all the stock exchange, but practically it's not possible. So the stock exchange allowing more than one charge in the place, and non-instance of the margin requirement in the stock exchange, and no proper regulations of the listing of stock exchange. So the listing is a very important one, because the listing means it is the rank of the company. So when the stock exchange give the first rank in your particular company, the investors think about to buy the company shares, the first rank shares, but there is a proper regulation, but practically the stock exchange has not maintained any proper regulations of the listing. So this is one of the drawback of the stock exchange. Next, move on to the stock exchanges in India. Children, how many stock exchanges in India? Yes, there are 24 stock exchanges in the country. Out of them, the 21 stock exchanges being a regional stock exchange. The rest of 3 stock exchanges set up in the National Stock Exchange, NSE, OTCI, over the counter exchange of India, and the next one is ISE, that is Interconnected Stock Exchange of India. These 3 are other than the regional stock exchange. But how many stock exchange? There are 24 stock exchange. This is a 1-mark question. How many stock exchanges in India? 24. How many regional stock exchanges in India? 21. Okay, children. So please underline that word. How many stock exchanges in India? 24. How many regional stock exchanges in India is 21. Okay. What are the name of the stock exchanges? See, there is a big chart in your book, like Bombay Stock Exchange, Ahmedabad Stock Exchange, Bangalore Stock Exchange, Bhubaneswar Stock Exchange, Cochin Stock Exchange, Calcutta Stock Exchange, Guwahati, Hyderabad, Jaipur, and Ludhiana, Madras Stock Exchange, Madhya Pradesh, Mangalore, Pune, Saurashtra, and Coimbatore, Meerut. These are all the the 24 stock exchanges in India. This is a 1 mark question. It's also a book back question, 2 mark. How many? Write any 5 stock exchanges in India. You can write out of 4 any 5 things. Next. And who are the brokers in the stock exchange? What they are called? What they are calling? The first is a remiser. Who is a remiser? He acts as an agent. There are different types of people who are the intermediary of the stock exchanges. The first person is a remiser. The remiser means he acts as an agent of the member of the stock exchange. He obtained the business for the principal, the member, and he get a commission for his service. The remiser is an agent. Simple. A remiser means he is an agent, and he obtained the business in the stock exchange as per the rule. He get the salary, he get the commission for his service. He is called remiser. And next is the authorized clerk. Who is the authorized clerk? He is a mere employee of the members. Appointed by the authorized clerk is appointed by the members of stock exchange. The authorized clerk transact the business to whom? Behalf of their employers in the floor of the stock exchange. They get a salary plus a commission. Always the salary is a standard, but the commission, according to the sales and purchase ratio, the commissions may be differ. So he is called a authorized clerk. These are all the 2 mark question. And broker. Okay, who is a broker? He is a commission agent. He acts as an intermediary between the buyer and seller. He never purchases shares. He never sells the shares. His duty is he just a connected between the 2 people. One is the buyer and seller. They do not purchase any shares. They bring together the people, and the broker charge a commission from both the parties for his service. And the broker are expert in the estimating the trending price of the shares. And the broker get the order from the investing public and executing them through the jobbers and the other people. So he get a sale of broker. He get a commission for his service. That is why he is called as a broker. And next, jobber. Who is a jobber? He is a security merchant. The jobbers are the security merchant. He dealing only the shares and debentures. And he is an independent operator. They buy and sell the securities on their own behalf and try to earn through the price level changes. The jobbers cannot deal any on behalf of the public. They only taking a commission. So in India, these people are called Taravani Walas. So he is a jobber. Okay, next, speculation. It's a very important one. Always there is 2 things happen in the stock exchange. One is the speculation, and other one is the gambling. Okay, what is the speculation? It involves the trading of a financial instrument involving high risk and the expectations of the significant return. The motive is to take a maximum advantage and one of the fluctuations in the price in the market. And the speculators are always prevalent in the marketing conditions where the movements of the price and the securities are highly frequent of the volatile. So it is called a speculation. And next is gambling. There is no reasoning involved in the gambling. It used according to the situations. The gambling people try to earning the profit of the status of the conditions of the country. It accentuates the fluctuations price and unethical and illegal. And it does not any perform the economical functions. He uses the situation. The gambling people use the situation for himself. So that activity is called gambling. Okay. Next is a very important one. What are the different types of speculator? The speculators are doing the speculation. See, according to the animal's activity, the speculators are called, there are 4 types. They carrying the name depending on the motive of the trading in the stock exchange. They are named after the animals because the behavior of the animals is same for these people. That's why the peoples are called bull, bear, stag and lamb duck. You know children, the bull means is what? Kalai maadu. Bear, karadi. Stag, man. Lamb duck. Duck means what? Lamb, nundi vat. So the character, the behavior of the speculators is resemble the animals. So the peoples are called bull, bear, stag and lamb duck. Okay, why he is called bull? Why the character of the bull is same for the speculator? Let us see why he is called a bull. A bull is a tejiwala. In Hindi say a bull or tejiwala is an operator. He expects the price of the shares in the future is increased. In anticipation, the price he make the purchase of the shares at present and the other securities with the intention to sell at a higher prices in future. So he purchasing a share at low price and he want to sell the shares in future at higher prices. So the behavior, children, the behavior of the bull, always the bull like his victim to pull his tents through his victim up in the air. The bull speculator stimulate the price in future to rise. Because the bull, நம்ம நிறைய ஜல்லிக்கட்டெல்லாம் பார்த்துருப்போம். அதில் ஜல்லிக்கட்டில் பார்த்தீங்க அப்படின்னா அந்த காளை மாடு என்ன பண்ணும் அப்படின்னா தன்னுடைய எதிராளியை தன்னை அடக்க வரவனை என்ன பண்ணும் அப்படின்னா அந்த 2 கொம்புகளால் அப்படி குத்தி அப்படி உயரத்தில் பறக்க விடும். ஸோ அதே மாதிரி the speculator wants the purchasing value of the shares is always less, but when he sold the shares in future at a higher level. So the behavior of the bull is same for this people, this man. So he called a bull and he is called a optimistic speculator. It means positive thinker. Optimistic means positive thinker. So he is called a bull. This is the meaning of the bull. Next is a bear. A bear or mandivala speculator and expect the prices to fall in future and sell the security at present with a view to purchase them at low price in future. So what is saying? When the value of the share, when he purchase the shares at a low price and sell them at a high prices, and after the sell that, what he expect, the same share will be less for the forthcoming days. So he expect the date, he expect the price when the shares are fell down, when the value of the shares is fell down. So a bear, because his character, a bear does not have the securities at present, but they sell them at higher prices in the anticipation that will supply them by purchasing at a lower prices. Usually a bear presses his victim down to the ground. The same happened. Similarly, the same character, the bear speculator tends to force down the price of the security. So he is called a pessimistic speculator. That is called negative thinker. That person, the bull is a optimistic speculator, positive thinker. The bear is a pessimistic speculator, that is called the negative thinker. And next, stag. A stag is a cautious speculator because always he is very cautious. Why? You see, you're watching the Discovery Channel. Always the bears are drinking the water in the pond. His ears are always like a flagging because every time he cautious. Is there any in and around any animals to round up him? So he thinking about that. So the same way, this type of the speculator always cautious. He apply what he is doing, no? He apply the shares in a new company and expect them for a premium if get an allotment. He watching the companies, in which company sell the shares at a premium level, premium value. So immediately he applied to the company for shares. For example, when a company sell the shares at rupees 10, he fixed the premium plus 3 rupees. So totally 13 rupees. This person watching that company, immediately he apply for the shares like 100 or 200, whatever it may be. After he get an allotment, he select the particular those companies' shares are more demand, like to carry on a premium. So immediately he sell the shares to the other people. He showing that allotment letter. He never buy the shares. He received only the allotment letter from the particular company. So after immediately he received the allotment letter, he showed that to other people, see, this is that company. I got an allotment. See, at the time of issue, that is a face value is 10. Premium 3 rupees. So beginning level, the value is maybe high. In future you think. Immediately the investors are very interested eagerly to buy that company shares. So he sell the shares before being called to pay the allotment money. So always this type of the speculator thinking about, concentrate on only the premium type of company. I mean premium value shares of the company. So he is called a premium hunter. Next is a lame duck. So lame duck is an ondivatu. When a bear finds it difficult to fulfill his commitment, he is said to be the struggling like a lame duck. Ida vangalama, ada vangalama, like a bear. A bear speculator is called as a lame duck also. Because a bear speculator contracts to sell the securities in future, I mean the later date. But on the appointment time, he is not able to get the security as the holders are not willing to part with them. In that situations, he feels concerned, and moreover, the buyer is not willing to carry the shares and to carry this transaction. So he is called a lame duck. Next is what's the difference between stock exchange, commodity exchange? This is a 5-mark question. And what are the types of speculator? 2-mark question. What is meant by bull? 2 mark. What is meant by bear? 2 mark question. What is meant by stag? 2 mark. What is meant by lame duck? Is a 2 mark question. Next, what's the differences of the stock exchange and commodity exchange? First is the meaning. What is a stock exchange? It is a exchange. It is a market for buying and selling the shares. That's all. And the commodity exchange, it is the exchange of the commodities are traded. It means things. What are the tradable commodities? Like gold, water, copper, gas, etc. This is the commodity exchange. Next, what is the function? The stock exchange providing the easy market. But the commodity exchange hedging the prices of the insurance services and liquidity to the shares and securities. And what is the object of the stock exchange? It is to facilitate the capital formation and making the best use of the capital resources. But in the commodity exchange, the object is facilitating a goods flow through the risk reduction. This is a commodity exchange. And who are the participants? In the stock exchange, only the 2 people. One is the investors, the other people is the speculator. And the commodity exchange, producer, dealer, trader of any other body of the speculators are the participants in the commodity exchange. And what is the period of dealing? Time. The stock exchange, cash dealing, ready delivery dealing, and dealing for the account for the fortnight. In the commodity exchange, instant cash dealings and the settlement period, it may be 2 or 3 months or the future dealings. Okay, this is the period of dealing in the commodity exchange. And what are the articles are traded? In the stock exchange, the industrial securities such as stock, bond and the government security. But in the commodity exchange, only the durable products and graded and goods having a large volume of trade and prices uncertainty and uncontrolled supplies, this type of the products are traded in the commodity exchange. And what's the speculation? The speculation ensures the sales ability of the securities, affording a broad and ready and liquid and the continuous market of security. But in the commodity exchange, the speculations ensures the assumption and the absorption of the price risk. It is the speculation of the stock exchange and commodity exchange. And next is the forward contract. What's a forward contract in the stock exchange and the commodity exchange? The forward dealings are simplified as securities are fully standardized. But in a commodity, the standards are fixed for delivery grade to facilitate the future contract. This is the forward contract of the stock exchange and commodity exchange. And next is cornering. What's a cornering? A seller has to deliver the agreed security to the people is very easy. But in a commodity exchange, the cornering is very difficult, as a seller has option to deliver the standard or the other deliverable goods. It is called cornering in the commodity exchange. And the price quotation. As regards in the stock exchange, the dealings are forwarded. Only one quotation is possible. Only one. ஒரு தடவை மட்டும்தான் அந்த price நம்ம fix பண்ண முடியும். But in a commodity exchange, for future dealing, multiple quotations are possible. இங்க fix பண்ண முடியும். I mean the stock exchange in future இந்த விலைக்கு போகலாம் ஒரு தடவை சொல்ல முடியும். ஆனால் commodity is not like that. Every time the quotations are going to multiple times or multiple ways. That is in the commodity exchange, that is the price quotation. Okay students, the next part we will discuss in the next session. Thank you children.